Too often during tax season, we meet with investors that are struggling with solutions on how to shelter capital gains. Typically, they think they just have to pay the capital gain tax. But here at Roers, we like to say, friends don't let friends pay capital gains right away. And what we mean by that is there are solutions to sheltering those capital gains. So first of all, what is a capital gain? Well, a capital gain is triggered through the sale of one of three areas. One, you're selling real estate. Two, you're selling stock. Or three, you're selling a business. So many times as business owners are selling, they're triggering a very significant capital gain. And again, they think their only solution is to pay it. Or you're selling real estate, you're selling commercial real estate, a building that you've held on to a long time. There is a solution to help there with that tax as well. The third, though, I think is interesting for folks that are sitting on maybe a lot of company stock, or you're currently watching the volatile market and looking for a time to capitalize and sell a certain amount of your stock. But what might be holding you back is, I really don't want to have to pay that tax payment. That's where opportunity zones come into play as the solution. So if you have triggered or plan to trigger a gain in any of those three areas that we just talked about, we should have a conversation about opportunity zones. So what is an opportunity zone? Well, an opportunity zone is a real estate development in a designated area across the country where the city and the state have deemed they want to see more development happen in that area. We, the developer, receive tax benefits to build there. You, the investor, have the solution to shelter and defer that tax payment out. So really, there's two great benefits for you putting that capital gain into an opportunity zone. The first benefit is you're deferring that capital gain tax payment out until the tax year of 2027. So it hits on 26 and you pay it in 27. So deferral is number one. The second is really the most important that I sit down and I talk with my clients about. That's the aha moment for them, which is we have the property for 10 years, but when we exit in year 10, all of that appreciation comes out 100% tax-free. That's right, you heard it, 100% tax-free. So what's nice for folks to realize is there's an end in sight. They can defer that gain, but they walk out being done in 10 years with tax-free appreciation. All while that entire 10-year window, you have money in a hard asset. It's cash flowing on a consistent, regular basis. It's creating that passive income for you. It's kicking out depreciation and additional tax benefit. So if you've sold a business, you've sold stock, you've sold real estate, we should talk about opportunity zones and how that can solve the problem for you.